Good morning. We are live. It is Monday, January 31st, 2022, and this is the Deep Dive with Keeping Current Matters. My name is Kate Rezabek, and I am so excited to be here with you this morning. We have a very special guest with us here today. Leslie Appleton-Young, the former chief economist from the California Association of Realtors, is going to be joining us today. Leslie, I am so happy to have you here.
Good morning, Kate. It's great to be here.
It's such a treat for us. We've got a great conversation ahead. I'm really excited to get started and talk about housing as a hedge against inflation. So I'm going to begin by making sure you know Leslie Appleton-Young, as I said, former chief economist for the California Association of Realtors. And to give you a little insight, Leslie is one of the most accomplished and well-renowned economist in the real estate industry. And we actually get to hear from Leslie every week. She's an integral part of our KCM team. And we have a weekly research meeting where Leslie joins us every week, and she gives us the latest perspective on the economy, on inflation, on consumer confidence, on everything that is so mission critical to understanding how it applies to the housing market. So we can turn that around and give that to you. So that's a huge reason why we have Leslie here today. And thank you again, Leslie, for being here.
It's my pleasure. I can't wait to hear where we go here.
Absolutely. I think it's going to be a good one. Now, as I mentioned, we're going to be talking about homeownership as a hedge against inflation. And the reason this is so important is because in inflationary times, where you want to be is in a fixed monthly mortgage payment. You want to be in an asset, a tangible asset that's outperforming inflation. And we're going to talk through all of that today, the data and the insights that you need to have to help your clients understand that. And, I think we feel this a lot right now. Home values are not immune to these rising prices. We've seen massive home price appreciation over the past couple of years. We've seen mortgage rates start to tick up, and rental prices are rising too. We're going to talk about rent a little bit later in the conversation, but as we think about locking in one of your biggest monthly costs, that is housing. And you want that asset to be something that's appreciating in value. And that's exactly what we're talking about. And, if you think about all the rising costs around you, think about your own experience. What have you experienced at the gas pump recently? What have you experienced when you've gone to the grocery store? Prices are rising. And when you can lock one of those major costs in at today's rate, at today's cost, at today's prices, that is a huge hedge against inflation. And it's one that has traditionally performed very well over time. So I'm going to get us started today with a quote that I think really kicks this off very well. It is from Investopedia, and it says, real estate is one of the time-honored inflation hedges. It's a tangible asset. We're going to talk about what that means in a moment. And those tend to hold their value when inflation reigns, unlike paper assets. More specifically, as prices rise, so do property values. And that's exactly what we've seen over time. So, Leslie, when you look at a quote like this, and we talk about, investing in a tangible asset, what kind of pops out to you? What comes to mind?
I remember when I started my career at the California Association of Realtors, one of the first jokes I heard was, when is the best time to buy real estate? And the answer was always 5 years ago. And I'm thinking of today's market and going back 5 years. I'm thinking of going back to 2009 and 2010, and those moments when it was a really good decision. We know, and I know you're going to show the data in the next graph or two, that we've had very significant increases in housing prices over the last couple of years. And I think the idea of timing the market is something to think about seriously, but also really be aware of the data that KCM is presenting, because the fundamental drivers of house price appreciation over the last few years are really solid. We have incredibly strong demand driven not just by consumer balance sheets, but also by the demographics of the country. And then you're coupling that with very, very low rates. So the idea that let me wait a couple of years and things will balance back out to where they were, let's say in 2017, 18, I don't think that's really supported by the numbers, Kate, that you're going to be sharing.
Yeah, I think that's very true. You always want to be in that area where your asset is outperforming inflation. And what we're about to show really articulates that. Now, this graph is home ownership as a hedge against inflation, and it goes all the way back to the 1970s. And I want to walk through what this means because I think it really speaks to that home price appreciation that you're getting at, Leslie. This is home price appreciation versus consumer price increases over the decades. And if you break it down, the blue bars are inflation rate, how that averaged out over each decade, and the green bars are home price appreciation. Now, if you look at the 1970s, we can start there over on the left. You can see that home price appreciation outperformed inflation. So that's huge. That was that asset that was growing in value. And then in the 1980s, a little bit more balanced, 5.6% inflation, 5.5% home price appreciation. Now, when you tick into the 90s, you can see a jump up on home values. So 4% home price appreciation versus a 3% inflation. So starting to see how this plays out over time. When we look at the 2000s, and this is, kind of what you were edging at, Leslie, it was a very different market and home values performed at a very different rate than what we're seeing today and what we're projected to see going forward. But take a look at the 2010s. Home values really started to accelerate. You can see much higher performance on home value than inflation. In 2020 and 2021, that's where that massive home price appreciation has really come into play over time. So, when we look at this as a whole, home values have outperformed inflation for decades, really, start to finish. We can see that, as a whole, and that's exactly where you want to be, is in that asset that's outperforming inflation and locking in that cost to shield you from inflation going forward. And Leslie, as you look at this graph, you've been in the business for a while. What kind of pops out to you?
I think looking at the 2000s and really understanding what happened at that time, because I think everyone at one time or another is going to be talking to a client that says, well, all this is great, and I see what's been going on the last few years, but what about 2008, 2009, 2010? We know nationally we had a drop in home values of 19%. That is significant, right? I mean, that even much sharper than when you look at a 10-year period. And I think we need to recognize that it is impossible to predict, prices going forward. It's impossible to predict rates, but it is possible to tell reasonable stories, scenarios, if you will, about what is likely to happen given the variables we're dealing with today and giving past performance. And I think KCM has done an excellent job in blogs, in the deep dives throughout, talking about why this is not a repeat of the financial crisis in the mid 2000s. You look at how tight underwriting is today. You look at the strength of the equity that people have in their home. You look at the inventory shortage that's absolutely unheard of, and it creates a very different picture. So my advice is, don't rely on your opinion, rely on the data that's provided in a graph like this and talk it through. And again, you can't eliminate uncertainty, but you can make very reasonable decisions based on the best information you have.
Leslie, that is such a great point. You're so right. And, we've been saying for a long time that this is not 2008 all over again. We're not headed for a housing crisis. We have been looking at those fundamentals, as you mentioned, inventory, equity, lending standards, all of those things that are shaping up to be a very different market and today. And, projections on where the market is headed. We follow all the experts on where this is supposed to take us. And I think the data is really most important. Like you said, it's the fundamentals today that are vastly different. And, this is a great graph to screenshot, to share, to keep on your phone, to have this conversation, to really pull in the data with your clients who might be sitting on the fence, might not be sure. And I think this becomes really, really important as we start to talk about renters. And, we've said for a while now, rents are skyrocketing. We talked about it in our deep dive a few weeks ago on, I think, January 10th. So you can go back and you can look at that deep dive again to really get the data behind rental skyrocketing. But if there's someone sitting on the sideline that you're talking to who's like, I'm going to rent a little longer, like I'm not sure where prices are going to go, I'm not quite ready to buy, but I have the cash, but I'm not really ready to make the leap, that's a great conversation to have with someone to lock in today's cost and understand how to kind of hedge against those inflation and those rising rents going forward. And I think this next quote really says that. It's from Bankrate, and it says, a fixed rate mortgage allows you to maintain the biggest portion of housing expenses at the same payment. Sure, property taxes will rise and other expenses may creep up, but your monthly housing payment remains the same. That's certainly not the case if you're renting. So with rental prices rising month after month, year after year, locking in with home ownership with a fixed mortgage rate with a fixed monthly payment shields a renter from those things. It's home ownership that is really a game changer here. And, this next graph really kind of shows that it's rent increases outperforming inflation in most years. And what you can see here is rental price appreciation and core inflation rate. Again, this is going back to the 70s. And how you read this is the blue line is core inflation rate. So you can see that come all the way through. The green line is rental price appreciation. So the rate at which rent prices are rising. And largely, from end to end, you can see that rental prices have increased at a faster rate most times than inflation. So that means those who are renting continue to pay more. And at the same time, they're waiting potentially to go buy the home and lock in that monthly payment while homes are getting more expensive, while mortgage rates are going up, while prices are rising. So really kind of paints that picture of, how renting, especially for those who could buy today, is an important transition into home ownership. And Leslie, as you take a look at this, what kind of comes to mind for you from your perspective?
Well, I think it's the reality that renting is getting less affordable than home ownership, and really recognizing that the demand supply imbalance in the rental market is just as severe as it is in the ownership market. So you're not really saving anything, right? And as you're looking at the projections for future increases in home prices and future increases in mortgage rates, if you can afford to buy, and we have had some diminishment in affordability, but housing is still affordable. It's less affordable than it was. It's still affordable. And when you compare that with rents, if it's a good time for your client, it's time to really get off the fence and get in there and compete and get a home, because this is one of those moments where you're going to look back and say, even in a competitive market, I should have made that decision, because renting is not going to be a good decision.
Yeah, that's so true. And I think you bring up a good point that everybody is ready to buy at a different time.
Right.
And there's some people who are ready to buy and some who are waiting for different reasons. But for those who are waiting just to see if prices are going to drop, buying now is so mission critical. And we've got a couple more quotes that I want to share with everyone today that I think really drive this point home. This one's from Forbes. It says, homeowners are shielded from rental prices because their cost is fixed, regardless of what's happening in the market. Tangible assets like real estate get more valuable over time, which makes buying a home a good way to spend your money during inflationary times. You mentioned it earlier about buying 5 years from now. I think we always say anyone who's buying a home today is going to be bragging about that 10 years from now, bragging about the mortgage rate they secured, the price that they got, the equity that they're building. All of those things really shield a home buyer from inflation in their biggest monthly cost. And one more quote that I want to share, this is from Ali Wolf at Zonda, and it says, if you have cash and are expecting inflation, you want to think through where you can put your money so it does not lose value. Housing is commonly looked at as a good inflation hedge, especially with interest rates so low. Now, interest rates we know have been ticking up this year. Freddie Mac just released their 30-year fixed average for the week was, about 3.5%. We know that their projection for a year from now is more about 3.8%. So it is rising, which means that locking in today, even though it's a little higher than it was a few weeks ago, it's lower than where it's projected to go. That's going to help keep that monthly payment down and shield from inflation again. So really important to have this conversation with your clients. And I think if anyone is still on the fence about what's going to happen with prices, this next graph is really going to help articulate where experts project they're going to go over the next few years. This is cumulative house appreciation by 2026. It's from the Home Price Expectation Survey. So this is a group of roughly 100 economists, investment analysts, people who are projecting out home price appreciation over the next 5 years. And if you look at this graph, it's broken down by optimists, all panelists, and pessimists. So take a look at that orange section. That's pessimists. Those are the people who have the lowest projections over the next 5 years. Among those, they're still saying about 23.7% home price appreciation. That's cumulative year over year into 2026. That is huge. That means home values are projected to rise. We know mortgage rates are projected to rise. And so really locking in today's cost is a major hedge against inflation going forward. So I'm going to pause here and see, Jessica, are there any questions that Leslie and I can answer today?
So we actually haven't had any questions come through. We did have one really great comment from Tamara, who said, "Thank you for hammering these points. If it still doesn't make sense, I would recommend rewatching the last 4 deep dives until you can easily digest and explain this. These topics will dominate the conversations for the first few months of this year." And I love this comment, one, because Tamara's an awesome member. We're always excited to have her on with us, but also I did want to point out that you can watch the replays of the deep dive. If you are a member, you can visit the deep dive archive of your member area where the replays are posted along with the slides. And if you're not a member yet, you can visit trykcm.com to get started with a free trial today. And it looks like we did have one question come through from Amy just now. She said, "Can we talk about the relationship about 2022 house prices and inflation?"
Sure. Leslie, is that one that you want to talk about, home price appreciation for this year?
Yeah, I will tell you that the economists, economics world is divided on what inflation is going to look like in 2022. The administration is saying by the second half of this year, we will see a downward trend in inflation because the supply bottlenecks that are at the root of the price increases that we're seeing now are going to loosen up over time. We're already seeing that in some areas, and we'll get back down not to 2%, but maybe 3.5%, but back to a level not like the 7% that we ended in December. So there's that, and then there are others that think we are poised for higher inflation going forward. So again, you've got more than enough expertise to take you the whole gamut. I will tell you that I do think we are going to see inflation turn a corner in the second half, because we are already seeing sectors where that is happening. But we do also expect to see rates going up. I mean, every group that Kate's noted that expects price appreciation is also looking at increase in rates, and rates are still long-term very, very attractive, but every dollar counts, right, when you're looking at your budget. So I think we can be fairly optimistic, but timing is critical here.
Yeah, I think that's a really good call, Leslie. And when you tie that inflation rate back to what we're projected to see in home price appreciation through the end of this year,
Yes.
We follow 6 or 7 experts that are showing on average, when you put them all together, roughly about 5.3 to I think 5.7% home price appreciation through the end of 2022. And, that is a product of high buyer demand. It is low inventory. And of course, it's not the massive appreciation we've seen over the last year, but home values are projected to continue rising at the same time. So really important to put that big picture together.
Right.
All right, Jessica, any other questions?
Yes, we had one more come through from Scott, who asks, "How do we leverage this information to get sellers off the fence?"
That is a great question. I think the The story applies to a seller as well. You know, if they're waiting to sell their home because they want to see what happens with prices, those homes that they're getting ready to buy are just going to get more expensive as well. So it really is a helpful conversation for both to make sure that everyone you're speaking with understands that home prices are projected to rise and that fixed monthly cost is really going to lock in as that hedge against inflation. Whether you're buying your first home, you're moving up, you're downsizing, whatever that is, now is a great time if you're ready. Thank you all for joining us. Be sure to use these resources with your clients, and we will see you again soon.